So I think now's a better time than any, David, to pop up the Nasdaq, and we can look at
Actually,
that. And for anyone that's
Jalen's got Jalen, you got Trading View on, right?
Yeah,
You pull it up.
yeah. What's the ticker for that? IXIC, is it?
Yeah, I was just gonna say, adding to what you said, Brendan. I think a lot of the money is going into not to quality tech stocks, right? Because I just noticed today that Apple's up like 10%. Like it was like flying around the $125 level for like months, and I just checked it. It's like 145, so it's up like 10% or so.
Yeah,
And I'm like,
yeah.
So
That
it's
was,
interesting that you say that because I actually have context on that because I follow these FANG stocks or these big tech stocks like, really, really in depth, of course, because that's my bread and butter, right? And Amazon's literally been consolidating since they announced the new iPhone, the iPhone 12. That was almost last year at this time, like let's say give or take like 10 months. So um, it's been consolidating for a really, really long time. And these companies are like major components on ITSIC, on the Nasdaq. Like, I think Apple's something like 11% of the index. I mean, I think we're talking Nasdaq 100 here, but
yeah,
still, you got
yeah.
Amazon, you got Apple, you got Alphabet, Facebook, Microsoft, Nvidia, Tesla. These names, like, 6 or 7 names can move the whole index, and really nothing else matters. And that's why I think the Nasdaq is it's the key to the market. It's been leadership in the market since this bull market started. I want to say in 2013 when we broke above the double top in 2000 and 2007. So the Nasdaq's leadership, and always follow leadership.
Sam, can you pull? Yeah, there we go. Beautiful.
yeah, it's the Nasdaq here.
So if you can just hover over June 22nd was the day that I marked.
June 22nd, right there.
Yeah, so that was a really important day because that marked the breakout above those two failed breakouts. One in, I believe it was May and March and February. So we had a couple of times where we tried to break that 14,000 level. It proved to be pretty strong resistance. And right now we're running into our first volatility event, as I call it, of this new advancing phase.
It looks
Yeah,
like it
that's
was
a
like
nice,
almost a straight line. Sorry,
yeah,
guys.
a nice little pullback there, though.
Is that daily? Yeah,
Yeah, it's a daily.
nice
So I
recovery last
really
few days.
like this chart because it's kind of like we're stair stepping our way upwards. We take like 2, 3 steps forward and 1 step back. And I think for the NASDAQ, a volatility event like this is perfectly natural. You have, a couple percent setback. It's sort of a time correction mixed with a price correction in a way. Like you just have to consolidate for a couple days. I think this thing should be through all-time highs again in a couple sessions, maybe even the week after. But when you compare it to something like the Dow Jones, which I believe is DJI on TradingView.
Yes.
Exactly. I see a little bit of a different picture here. We're consolidating here, which is all fine. But when you look at the core components of it, I start to get just a little bit worried. For example, one of the biggest names, if not the biggest name on the Dow, is Goldman Sachs, and you can pop that one up, GS. This is a chart that I do not like at all. There's a head and shoulders brewing here.
Mm,
I want to know what you think about this one, guys, because
that
the
was
financials are out of favor now.
that was a big failed breakout right there.
I'm just not sure if financials have the juice to make new highs right now,
Yeah,
especially with the lower yield, lower rate environment.
yeah, that's interesting. So
What's the bulk of their business? Is it lending? Because they wouldn't have done that much in the last year, 18 months, right? With the
Well, they
lockdowns.
do a lot in investment banking, and it's been a
Um,
big year for IPOs for sure. But yeah, I think the lending side of it for sure definitely is big when, rates are so low and they're going to be low for a very long time. We can look at the US 10-year after this. But the other thing is the economy maybe not being as strong as people initially
yeah.
thought. and a little bit of decelerating growth next year. We talked about this last time. If we have 6% this year and 3% the next year, and who knows the year after that, may not be yeah. So you got the US 10-year yield right here.
Yeah. It's funny. This is actually like a beautiful short setup that I like to play, obviously in a much shorter time frame.
Really? Can you go into that a little bit? I'm really curious to hear.
Well, this is like one of my favorite short terms. This is like one of the ones that I was showing you guys earlier. It's basically, you look for something that's been downtrending for quite a while. You get this drop off, and then it kind of breaks, down here. So we have this line, this 140s line sort of thing. And then as soon as it breaks that low, you wait for this big bounce to come back up, and then you short it right where it breaks down. So like right here, you see how it was trending down. We had this kind of trend shift where it starts trending back up. Right there at this point, that's where it broke, right? That's where it broke and reversed again. That's right where I would hit it short every time. And look at that. Like even it's hilarious. Even on the bonds, that same pattern still works.
Yeah, it's funny that it hit it like almost like
Yeah.
to T.
So like the way that I would play this personally, and like I don't know if it's gonna play out like this, is I would basically do something like that. Oh, I would do something like that, and basically like what I would do is I'd start in small here at this level, and then as soon as it broke through that uptrend line again, I'd be full size right there, and I'd ride this all the way down to that low. So I'd ride that down to 50 cents if this was me playing this.
Okay, so I really think that you're onto something. We have so many factors, like we were talking about this last time, whether it was just, the population and the technology and everything else, which sort of is conducive to lower interest rates and lower yields. But the coronavirus fears and fears of more lockdowns and everything else, like, we're not trying to speculate on that. But at the end of the day, I always say, listen to the bond market. And the bond market's definitely trying to tell us something right now. And the bond market, I said this last time again, but I'll say it again, is the bond market right now is telling you to buy stocks. It's telling you to buy growth stocks. It's telling you to buy dividend stocks. It is not telling you to buy economically sensitive stocks, which are the exact stocks that sold off on Thursday. And I do not think that this sell-off has reached a crescendo. I think we're going to have to revisit this. I think that the Nasdaq could be in good shape because a lot of the names are less economically sensitive. They're non-cyclicals. They're going to grow regardless what the economy does. But these economically sensitive names and these epicenter stocks, they could be in some deep trouble.
I just wanted to point out something interesting. Like Kaylin, you were pointing out that pattern that you played, right? And you like you just instantly recognized it, and you knew exactly what to do. The funny thing is, like, I wanted to point this out because like this is how people can use the same tools or not use the same tools. It's like I feel like I'm blind when I can't see the volume because the bonds don't show the volume, right? And so like for me, it's a huge thing in my trades because I kind of use it as confirmation. But I just found it interesting that you don't at all. Like you know that pattern so well.
Yeah. No, it depends. Like I'll use volume. I do use volume. Like I just don't have it up on TradingView. Like I have it up on my actual like DOS Trader thing. To be honest, I just don't know how to use TradingView very well.
Oh, it's really funny, Kaylin, because you use the exact setup I use. You use two moving averages. Looks like, what is that? Is that a 50 and a 200?
Yeah, 50 is the blue, 200 is the yellow.
Yeah. So, and then you have some sort of momentum oscillator. What is that? RSI?
Just the RSI 14.
Perfect. Yeah. This is literally the exact setup I use. I do some other, fancy charts. Like I have a Ichimoku preset, but this is like my favorite preset. I find it just super, just easy to use, intuitive, and it works really, really well.
Yeah.
So do you use the RSI to confirm the moves that you're seeing on price?
I don't personally. I use it kind of like it's not really something I use to determine whether I'm going to go in or out of a trade. It's more so just kind of like a background thing. Like I'll trade based on the chart, and then I'll kind of look at that, and if it's fairly in line with what I'm thinking, then I'll be I'm like, okay, that's just a little bit more confirmation. But I mean, for me personally, even if the RSI doesn't fully agree, that's not really going to have too much impact on my style of trading. But
Super interesting.
yeah, that's just me, anyways.
Brendan, you got to show me
So-
an Ichimoku cloud one day.
Oh yeah, we definitely should do a whole session on that because it incorporates so much data, and when you first see it, if you're not familiar with Ichimoku, it can be like a pretty daunting thing. But once you actually get the hang of it and you do the work, it's incredible. There's just so many data points,
I
and
spent the day just trying to learn the freaking names of the clouds. Like that's
yeah, the
it's a
names of the
lot, man.
clouds are interesting too, and it's not like there's some things that you use like when moving averages cross and whatnot, but there's other things like the CQ span, which is like the lagging line. It's just really interesting how it uses previous data and it uses data in the future too, versus a chart that like we use. We're all just looking at like the current data right now.